Inflation flatlines for the third consecutive month. The freefall in productivity plaguing the Aussie economy comes to an end, and chocolate eggs might be about to get a whole lot more expensive as cocoa hits record prices. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 28th of March, 2024. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Do you reckon Sean Aylmer misses being part of the show on weeks like this where there's actually still a fair bit happening? You've got kind of inflation data, you've got kind of a lot happening in politics. I reckon he would miss it.
Yeah, while he and Jackie are sunning themselves in Bali, I reckon this is the first thing on their mind. What's Fear and Greed doing?
Yeah, I'm sure he's really, really worried about us right now. We will ask him that next week when he comes back. Now, after the show, Adam, you have an interview coming up today with Diana Messina, Deputy Chief Economist at AMP. Now, that is all about the main story this morning, so we may as well jump into that. Inflation is stabilising. The Australian Bureau of Statistics monthly CPI figures show the third month of no change to the annual inflation rate in February.
And Michael, doesn't this feel like good news? It's at 3.4%. That's a touch lower than the 3.5% expected by the markets, which gave them extra confidence yesterday. So Treasurer Jim Chalmers welcomed the flat figures, saying they show inflation remaining at its lowest level in 2 years. The figures show that rental price rises continue to bite, though, as do higher insurance premiums, but food costs have pulled back a bit. Taylor Swift even got a mention from the Australian Bureau of Statistics for increasing hotel prices in Sydney and Melbourne over the month. However, accommodation and airfares fell elsewhere following the end of the peak January school holiday period. So overall, the Eras tour may have caused a spike in price for a few hotels, but the economy largely shook it off. Did you like that, Michael?
Oh, I did not like that one bit. It is one of my absolute pet peeves is people working Taylor Swift song titles and references into things.
Have you stopped leaning in to Taylor Swift?
Oh, dear Lord. Goodness me. Goodness me, Adam. Can I move on? Are you okay if I just completely ignore everything that you've said for the last 30 seconds and just move on with what this means for interest rates?
Yeah, that's a great question. And most economists are not expecting this data to derail the Reserve Bank of Australia's plans. This means they'll likely be on hold for a bit longer and speculation about rate cuts will continue. However, we get a quarterly read of the data in April ahead of the next May RBA meeting, which will provide a lot more detail. This will be the critical one to watch for any potential shift in the central bank's position. Online retail sales data from NAB, also released this week, shows a slowing in growth over February. Online is still outpacing broader retail sales, but it looks like pressure on consumer spending is translating into less shopping overall. Now, that is perhaps a signal that demand and therefore price rises will continue to soften as the RBA hopes.
All right, let's check local markets. And there was a bit of a slump in trading yesterday morning, but that was more than recovered, a bit of a boost after those CPI data. The ASX 200 closed up 0.5% to 7,820 points. It was a particularly strong day for consumer staples, healthcare and industrials. Woolworths was up 1.9%, Coles up 1.6%. Tech and materials had a weaker day, but it came after a pretty strong performance earlier in the week.
Another one worth mentioning, Michael, Southern Cross Media Group's chair Rob Murray brought forward his retirement to yesterday, and Platinum Asset Management's share price had a sharp 21.1% fall after losing $1.4 billion in mandated funds from a client looking to rebalance its exposure away from benchmark agnostic global equity managers.
Taking a look at international markets now, and this is thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. And Adam, there's a lot of talk about crypto at the moment.
That there is, Michael, and crypto stocks are getting heavily shorted. In fact, there's 11 billion in short interest against crypto at the moment, and that's according to an S3 Partners report. The majority is against MicroStrategy and Coinbase Global. Some of this could be hedging, and some may well be an expectation that Bitcoin's rally might soon be over. Separate to crypto, Michael, BlackRock CEO Larry Fink is warning that the US public debt situation is urgent and that the government needs policies to encourage economic growth rather than relying on higher taxes and cutting spending. He's worried a high debt America could make it harder to fight inflation down the track, as hiking interest rates would be tougher. He also warned that the US can't take it for granted that global investors will always continue to want to buy US debt, particularly with other countries growing their own capital markets. Gold is trading at just a touch under US $2,200, and the Aussie dollar is fetching around 65.3 US cents.
I know Sean always kind of laments the lack of action in the Aussie dollar. And so it's just nice to see that even in his absence, we've managed to keep it nice and stable for him.
Yeah, we haven't mucked it up while he's been gone.
But there's still time for it to move. Unlikely, though. We'll be back in a moment with the rest of the day's business news. Adam, the Productivity Commission has called an end to the, quote, free fall in productivity that started in June 2022, really kind of following the pandemic.
Michael, as you would expect, I pay very close attention to the Productivity Commission. Labour productivity increased 0.5% in the December quarter on the back of a 0.3% decline in hours worked and a 0.2% rise in output. The Productivity Commission's latest bulletin, released late last night, shows this was the second quarter of increased productivity, but even the last two quarterly reads didn't stop productivity from falling 0.4% over the year 2023. The Commission says the productivity bubble burst in 2022 after a sharp rise in productivity and has now bottomed out. There's been some downward pressure on productivity due to newer, less experienced workers entering the very tight jobs market, but it is now recording rises in half of the industries measured, and that's good news. This includes solid growth in productivity in information, media and technology, accommodation and food services. All this being said, though, productivity is still only nudging above the 2015 to 2019 average, and that was well below pre-2000 levels.
Isn't that interesting to think that newer, less experienced people coming into the workforce, because the jobs market is so tight, that can actually kind of reduce productivity because these are people who don't yet know what to do and how to work efficiently and productively?
Yeah, it makes sense, doesn't it? I mean, as you recruit people, they have to be inducted and trained before they can become fully productive.
Yeah, it makes complete sense, but you don't tend to think of it as actually just having a meaningful kind of material impact on the statistics like this, but I guess it does.
And isn't that what makes data great, Michael?
Oh, God. Oh, no. Your enthusiasm for data and for statistics is frighteningly contagious.
Well, it's obvious, isn't it?
Yeah, I know. All right. Now, this is an interesting one. Big one out of Canberra yesterday. Big companies will need to provide more reporting on their climate impact as part of new legislation introduced to Parliament yesterday by Labor.
Yeah, Michael, the new mandatory climate reporting requirements will align Australia with other countries. It's aimed at giving more transparency to investors by forcing big businesses to ensure companies make high-quality financial disclosures about climate risks. Now, this would require big listed and unlisted companies to meet the rules from January 1. Other big businesses would then be caught up in the rules in a staggered way to phase them in. A large part of this is to encourage investment into businesses critical for the energy transition and ensure Australia remains competitive on the global stage.
While we're on the topic of energy, Adam, will your home's next solar panels be made in Australia? That sounds like I'm doing an ad here, isn't it, for solar panels? But it's a legitimate question, and the answer is a resounding maybe, because the federal government is committing $1 billion to a new solar sunshot program, which is that's just an awesome name for a program.
Yeah, that's good.
It's cool. Sounds like something James Bond would be involved in. The government is hoping Australia can capture more of the global solar manufacturing supply chain.
Yeah, Michael, this is encouraging. At the moment, 1 in 3 Aussie households have solar panels, but only 1% of them are made in Australia. The government wants to shift this, including driving investment into solar panels in the Hunter region, where the government announced this new scheme. The full details are yet to be published, but it's going to include supply chain support, production subsidies and grants.
Yeah, sounds like good news. Now, materials, financials, and energy are the most popular sectors among Aussie investors. This is according to Self Wealth's Investor Report 2023, which has just been released.
Yeah, Michael, it shows 2/3 of all ASX trade volume from 129,000 local investors on the platform was concentrated in those three sectors last year. Of more than 10 billion in equities traded through the service, outside of ETFs, materials was more than 40% of trades, followed by financials at about 13%, and energy was at almost 9%. That's by volume. Another really interesting finding was the behaviour of different generations. Older investors tended to hold consumer staples, healthcare, real estate, utilities, and financial stocks. Younger Gen X, Millennials, and Generation Zs preferred tech. And now Gen Z, interestingly, also liked consumer discretionary.
That is interesting.
Invest in what we understand, right?
I suppose that's the case. Isn't that one of that's Warren Buffett's principle, isn't it?
Yep, it sure is.
Maybe there's some wisdom there. Now, Adam, the coalition will develop a policy that would allow courts to break up Coles and Woolworths if they were found to be misusing their market power, say for price gouging.
Yeah, Michael, I find this really interesting. The divestment laws the opposition will work on have come about following a push from the Greens for similar laws. Now, the Nationals were on the edge of working with the Greens to support them, following investigations into the market powers of the supermarket giants. Peter Dutton has now directly stepped in to work with the Nationals leader, David Littleproud, to stop a tie-up with the Greens. Labor has not been supportive of divestment powers so far, and neither has the Business Council of Australia. But the cost of living crisis might make tougher rules on the grocery giants more popular with voters. This is one to watch.
Yeah, and it is certainly becoming a very, very big political issue, isn't it? And it may well end up being a big election issue as we get closer and closer to the election.
I agree.
Now, turning to international news, by now I think everyone will have seen that the terrible footage of the Francis Scott Key Bridge collapse in Baltimore in the US. The tragedy has now forced shipping companies to adjust their plans to reroute cargo to other ports on the US East Coast. The bridge collapsed in the early hours of yesterday morning local time after a Singapore-flagged container ship hit a pylon.
Michael, this is tragic and it is a human story first and foremost, as we know. The Baltimore port is the second busiest on the US East Coast, and President Biden said the government there would work hard to get the port back up and running and the bridge rebuilt, with the government covering the cost. But this won't be a quick turnaround given the complexities and the size of the bridge and the need for investigations into the incident. This could result in some product delays and disruptions, and shipping routes are being adjusted. It will also be disruptive for the US trucking industry.
Adam, Apple's shipments of iPhones into China fell by about a third in February compared to the same time last year. Now, this makes it the second consecutive month to show a decline in the devices getting shipped.
There are new figures from China's Academy of Information and Communications Technology that indicate more trouble for Apple in one of the world's largest economies. There were 2.4 million foreign brands of smartphones shipped into China in February. That compares to 5.5 million in January, which was down almost 40% on the same time in 2023. So Apple makes up the lion's share of these phones by some stretch. And while the month was impacted by the timing of the Lunar New Year, it's not great news. Bloomberg is attributing the slowdown in iPhone sales in China to the strength of rival Huawei technologies and reluctance from consumers to buy up discretionary goods, but it's a live question whether this is going to be a trend or just a blip.
And finally, Adam, with the Easter long weekend kicking off tomorrow, we are obviously all thinking about chocolate.
Not just at Easter time, Michael.
I know.
But especially at Easter time.
Especially at Easter time. But chocolate makers are having a tough time because cocoa futures have doubled this year to above $10,000 for the first time ever this week.
Yeah, and Michael, cocoa's been one of the top performing commodities, and that is actually bad news for our big chocolate producers in Australia and abroad, and for what we ultimately have to pay on the supermarket shelf. Hershey has now copped it because of the higher cocoa input cost and has been downgraded to neutral from outperform by BNP Paribas Exane. Some of the rising cocoa cost is being attributed to new European Union sustainability rules aimed at stopping the sale of products that destroy forests. But pretty bad harvests on the back of bad weather and other growing growing challenges in major cocoa regions like West Africa have also played havoc with the supply of cocoa and therefore the cost. But apparently we don't need to be too worried about a spike over the next few days. Analysts suggest some of this might not hit shelf prices for another 6 to 12 months, but that might mean next Easter is a lot more expensive.
So this is essentially a long-range chocolate forecast.
Yes, you heard it here first on Fear and Greed.
God, we are getting in early. So basically the advice is stock up now.
Buy up.
Yeah, buy up for next Easter, this Easter.
It's a good form of hedging on chocolate.
It does not have that long a shelf life, but I'm willing to give it a crack. Up next is the Fear and Greed daily interview. You're speaking today with AMP's Diana Messina.
Yeah, Michael. And look, these inflation figures coming out, it's so topical. It's so important for interest rates and for everybody who's got debt. So what we hear from Diana is just so critical, I think, to understanding the context that we're trading in.
Yeah, absolutely. And Diana is a great communicator when it comes to this. Always worth a listen. Up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, it is a public holiday tomorrow and then again on Monday, but there is Fear and Greed every day because we do not like to rest. So there will be a new episode tomorrow and there'll be a weekend edition as well on Saturday. And Adam, it's you versus me.
At last.
I am so excited about this.
Oh, mind you, the last time we did that, I lost.
Well, that's why I'm so excited about it because I rarely win against Sean and I've been stockpiling stories this week.
Oh, I know.
I've been picking out the best stories, getting in early, reserving them. So I look forward to our competition on Saturday. Thank you very much, Adam.
Thank you, Michael.
It's Thursday, the 28th of March, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.